Years of finding brands that capture $1 billion.
Hello and welcome. This is All You Need to Know. I am Agam Vakil. Let's start by talking about how the global markets have panned out right now. And well, largely some weakness coming through for the American indices. This is followed by weakness in the European markets as well. And where we're getting mixed cues from the Asian markets, as you can see, we're seeing Nikkei decline by around 0.5%. On the other hand, Hang Seng is marginally in the green. Now, taking cues from there, we've seen rather flattish cues when it comes to the SGX Nifty, currently at around 10,600. And in terms of your American depository receipts, what we're seeing is an advance in ICICI Bank and HDFC Bank, and the only stock which is in the red is Infosys, which is down by around 1.6%. Coming down to our own markets yesterday, largely flattish moves, though the Nifty, the mid-cap and the small-cap indices closing marginally in the red. On the other hand, there was strength in the banking indices, with the PSU banking index advancing in trade. And two other sectoral indices which didn't do really well was the Nifty IT index and the Nifty Pharma index. Let's move on and talk about your institutional flows. And while foreign institutions bought stock worth around 277 crores, excuse me, on a net basis, DIS sold by just as much as quantity, again on a net basis. But when it comes to contributors on the Nifty, TCS and Kotak Bank, along with Sun Pharma, put some pressure on the indices, which did see some strength come in from HDFC Bank and ICICI Bank. Coming down to the futures and options space, there was very little change in open interest for the Nifty futures, with unwinding of around 1.3% on the bank on the Nifty. But on the bank Nifty, we saw longs building in. And this is your open interest distribution, where your maximum open interest continues to be with the 10,200 put and 11,000 call on the upper end. And moving on, we also have your open interest changes, where 10,300 put did see some unwinding. Let's move on and talk about your stocks in F&O band, Adani Power and Jet Airways. And among other stocks, or rather the other variables, we have Nifty put call ratio at around 1.57, the Nifty banking put call ratio at around 1.2, and among other stocks, we're also watching out for something like Kaveri Seed Company, Siemens, and Ashok Leyland, all seeing considerable losses as well as an increase in open interest. So, well, you do have shorts building in there. In terms of unwinding, we are seeing Divi's Labs, Jet Airways and Allahabad Bank, at least Jet Airways and Allahabad Bank looking at short covering, longs unwinding for Divi's Labs. So a whole host of stocks to watch out for. But now let's go across to Paul Allen from Bloomberg for the top international headlines.
China is said to have laid out a series of potential concessions to the US for the first time since the Northern Summer, and ahead of talks between Presidents Trump and Xi at the G20. Sources say talks have been constructive. However, we're told the ideas fall short of the major structural reforms Washington has been demanding, and most concessions are a rehash of earlier suggestions. Theresa May is claiming victory in her fight to win a Brexit deal, saying she's won cabinet backing for her plan. She emerged from 5 hours of talks with senior ministers to admit more battles lie ahead. May also described approval for the draft deal as a collective decision, which some observers say implies the vote wasn't unanimous. Leading Tory Eurosceptic Jacob Rees-Mogg has already said he won't support the deal.
These documents were the result of thousands of hours of hard negotiation by UK officials and many, many meetings which I and other ministers held with our EU counterparts. I firmly believe that the draft withdrawal agreement was the best that could be negotiated, and it was for the Cabinet to decide whether to move on in the talks.
We agreed to create a EU-UK single customs territory. Northern Ireland will therefore remain in this same customs territory as the rest of the UK. In addition, Northern Ireland would remain aligned to those rules of the single market that are essential for avoiding a hard border.
Oil snapped its record losing streak on more signs OPEC and independent producers will implement output curbs next year. The cartel says all sides are discussing deeper than anticipated restrictions to balance the market as demand for oil slips. Crude traded in New York dipped below $55 this week for the first time in a year. Brent is trading around $66 a barrel. The Aussie dollar strengthened as employment topped forecasts last month with above-average growth spurring hiring. Business created 32,800 jobs last month, comfortably ahead of expectations of a 20,000 gain. Full-time posts rose more than 42,000, while part-time jobs fell by just under 10,000. The unemployment rate held at 5%. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Certainly, Theresa May got this deal, more than 500 pages, agreed with the EU. And remember, this has been going on since June of 2016. She did get her own cabinet to agree. But one of our latest stories, listen to this headline, UK's May on the brink as Tories plot to kill her Brexit deal. Growing revolt within her own party, that's the latest talk. And in fact, at least 2 senior ministers, according to our Bloomberg News reporting, are said to be considering whether to quit, while scores of Conservative members of Parliament are lining up to vote against the accord that her cabinet grudgingly agreed to. So she said, look, it's my deal or you risk the hard retreat, you risk chaos. It's something that she's done the best she can. I'm sure that's what she thinks. And I'm sure if you read this, there's just no easy way out of this. To me, what's so interesting, though, is if they're ready to start talking about the revolt and leaving the party and pushing now, there's even more talk about, forcing another vote, forcing her out of office, having a new prime minister step up. Well, it'd be very interesting to see who wants to step up and where that leads, because this is something that everyone's going to lose something if this deal goes through and if the UK Brexits.
It was a very intense debate, wasn't it? I mean, we heard reports of lawmakers crying, shedding tears. So what are the key issues right now that remain? And we've been talking about this. It's just one of the hurdles in a very long process.
Well, the biggest one remains the Northern Ireland border, because in order to, and they've been talking about this, what is the backstop here? And what they've come to is saying, well, if Northern Ireland and the EU stay in the customs union, that's what the agreement is now. And of course, this transition period has been extended now from March 2019 through the end of 2020. Then we can maybe agree on something. But how do you keep Northern Ireland and the rest of Ireland borderless if Northern Ireland is part of the UK and if the UK really does believe in the rules change? That's why this is so tough. Now, the pro-Brexit Tories oppose this. They're afraid that too much is being given up, and they say, we're going to stay part of the EU indefinitely. We want to trade with them, but we want to make free trade agreements. And in fact, the Democratic Unionist Party has also been concerned about what it means. This is something that is so hard to solve. It remains to be seen what happens, but going to Parliament, I don't know. Yeah. The story has just begun, and it seems like just keep watching your Bloomberg, because the headlines are going to continue to fly back and forth on this.
Brent crude prices ended their 6-day losing streak to gain as much as 1% on Wednesday, amid signals that OPEC and its allies are weighing higher output cuts in view of the oversupply situation. OPEC president, in an interview to Bloomberg TV, said that OPEC would take whatever steps that are necessary to balance and keep the market stable. Meanwhile, strong data coming in from the U.S. inventories as well, when U.S. crude stockpiles rose 8.79 million barrels last week. As far as the base metal space are concerned, most names ended higher on Wednesday, with sharp gains coming in for aluminium, tin, lead, as well as nickel, as well as zinc. Copper prices rose for a second consecutive day on account of a lower dollar and strong Chinese infrastructure investment data. Nickel prices, however, continue to trade lower, falling for a 5th consecutive day. Spot gold prices, they rose 0.7% on the back of weakness in the pound, and reports suggesting that British Prime Minister Theresa May could face calls for a no confidence vote.
We just had the joint ministerial monitoring committee meeting, and And I think we have said that we need to change strategy. Obviously, 2019 is going to have its own challenges, and we are ready in our next meeting to change strategy and adapt whatever needed to maintain the balance on the supply and demand. We closely monitor the inventories; those are the fundamentals, and we are intended to keep the inventories at the level where they are with avoiding the risk of the build-up, but at the same time avoiding the risk of a major drawdown from the inventories, to keep both consumers as well as producers at a point of balance in terms of bringing investments, but at the same time enabling the economy, the world economy, to grow and prosper.
Can I ask, Mr. Al-Matouri, how much does the increase in production in the U.S. With their shale resources there, and the unexpectedly high amount of waivers given out for the Iranian sanctions increase other oil demand that you weren't expecting, or other oil supply that you weren't expecting? I mean, how much does that play into the equation?
I think it does play a significant role into the equation, and whenever we look at our production and adjusting our production as OPEC and non-OPEC members, is to balance whatever it comes from those producers outside the group. And you're right, most of the expectation were exceeded when it comes to the production from the United States and from other producers as well. That's why we need always to monitor all of those factors and adjust as needed to the market balance. We have cut in the past and to reach the market balance, and if we need to cut production to adjust to keep the market balance, we will do, but we will not overdo it. We are always going to keep that balance, and our reference is going to be the 5 years average that we worked very hard for a year and a half with our non-OPEC members to achieve. So I think if it comes to the question, are we going to act and act fast? I think we have in early December the meeting, and I'm expecting that those group of responsible producers will reach consensus on take the right measures to keep the market at balance.
So, Minister, December's still a way off, of course, but your best guess as to how much needs to be cut then in December?
Well, when we met at the JMMC, we asked the technical team to go and look at recommendations on the required adjustment. And as you can see, October has been a very fluctuating month, and we are moving now in November, and we are seeing that fluctuation. But there are things outside our control, which are the speculations in the market. The market fundamentals are still reasonable, not to justify the drop that we had yesterday, but at the same time we are dealing with so many other factors. I think when we're talking about the level, we will need to monitor, as your colleague mentioned, how much is coming from the non-OPEC and adjust when we meet. I think the exact number will be studied by the technical group, and they will bring that to the meeting, to the ministers' meeting in December. I think my expectation that adjustment and the group will reach consensus on whatever required to adjust the market.
Well, Vodafone Idea plans to raise close to 25,000 crore rupees. Now, the company did not mention why they are doing it, but analysts expect the fund proceeds of the fund infusion to be used to pay debt. Now, the fund infusion will be done via equity shares, which would lead up to 41% equity dilution. Now, of this 25,000 crore rupees, the promoter groups, that is Vodafone and Aditya Birla Group, have committed to infuse close to 18,250 crore rupees, while the remaining 6,750 crore would be done via public. Now, the infusion, if approved by the board, is expected to complete by the end of financial year 2019. Now, along with this fund infusion, the company is also considering the sale of its fiber assets to provide further balance sheet flexibility. Now, the company has over close to 156,000 kilometers of fiber routes across the country. Now, the proposed fund infusion would be the second one done by the company to pay debt. Earlier in January 2018, both the promoter companies, that is Vodafone and Aditya Birla, had infused close to 14,140 crore rupees in their respective telecom operations to pay debt and for the merger to go through. Now, the proposed fund infusion would lower their leverage ratio, which is one of the key conditions when it comes to their merger. Currently, if you see, the entity's net debt to EBITDA is close to 24 times. That's higher than what Bharti Airtel and Reliance Jio have. And post this fund infusion of 25,000 crore rupees, the leverage ratio would come down to 18.6 times, but would still be at an elevated level for the combined entity. Now, the company also reported its first quarterly numbers as merged entity, and hence we do not have any comparable for the earlier periods. Now, if you see the second quarter, it was weak for Vodafone Idea. Revenue stood at close to 7,700 crore rupees. The company reported a net loss of close to 5,000 crore rupees. EBITDA came in at around 460, while the margins came in at around 6%. Now, the average revenue per user, now that came in at around 88 rupees for the merged entity. Lastly, the merged entity also provided for 1,000 crore related to tenancy exit charges. Now, due to the merger completion, the company had cancelled some of the excess mobile towers. On account of this cancellation, the tower companies raised demands for exit charges close to around 3,000 crore rupees. Now, the company is in discussion with these tower companies and does not expect the amount to exceed 1,000 crore rupees, and hence it has provided only for 1,000 crore rupees in its second quarter of financial year 2019.
Well, a bunch of news that we are tracking this morning. Bayer Crop Science, which the board has given an approval to merge Monsanto with itself in the share swap agreement, the company will be issuing 2 shares to Monsanto shareholders for every 3 shares held by the company shareholders. Tata Power is second in the list, where the company's JV has signed an agreement to acquire 75% stake in Prayagraj Power Generation for a sum of around 6,000 odd crore. That's the second one on our list. Yes Bank, where the non-executive independent chairman Ashok Chawla has resigned with immediate effect, stating that someone who could give more time in the position of chairman during this transition phase of the bank should take over. Dhanuka Agritech, where the board has approved the buyback of 13.12% equity for rupees 550 per share. The current market price is around that 400 rupees per share, clearly a significant premium to what the current market price is. And also we're tracking in Jet Airways this morning. Tata Sons chief is going to be pitching in for the board's backing and is going to be presenting in the viability proposal for acquiring the airlines. And also we expect the Kotak Mahindra Bank, that's importantly a Bloomberg Quint exclusive, where ING Group is aiming to sell stake in the entire bank of around more than 3% via block deal this week. So again, a counter that we like to keep an eye out. Grasim, a bunch of results that we're tracking in. I'm going to start off with Grasim, where the company has reported in-line set of numbers, and if you look at the EBITDA performance, standalone VSF and chemical business clearly has led to a strong show for the company. Also United Breweries, which has reported in-line set of numbers, and if you look at the volume growth, that's almost a double-digit volume growth that the company has registered. Thermax, where it's a decent show coming in by the company, and if you look at the EBITDA performance of the company, it's a healthy number that we're talking about. It's almost a 15.7% uptick to a number of 110 crore as compared to 95 odd crore. And lastly, we're going to be chatting a little bit about Indian Hotels, where the net losses of the company, of the hotel, has actually narrowed down on account of healthy performance shown by the company.
The big brokerage calls for the day first three hours. Deutsche Bank on GAIL India. Now, the brokerage has maintained its hold rating on the stock with a target price of close to 395. Now, according to the brokerage, there's a near-term risk when it comes to the gas trading business of the company. Now, the sharp increase in US gas prices could dent GAIL's profitability in the gas trading segment, says the brokerage. Now, the brokerage also says that the current stock price has factored in all the upside from the gas volume growth, and when it comes to the transmission business, the valuations are at a premium when compared to its peers, and that's the reason the brokerage has a hold rating on GAIL India. Second, we have a CLS on Mahindra & Mahindra, and the brokerage has maintained its buy rating on the stock with a target price of 1020. The brokerage says that the second quarter the earnings were soft but in line with its estimates. And when it comes to new launches, that is Mazzaro, the brokerage says that it is seeing a good initial response with a waiting period of close to 6 to 8 weeks. Now, when it comes to the tractor business, the brokerage is expecting a slight moderation there, but it says that the overall outlook when it comes to Mahindra & Mahindra is still steady going forward. Lastly, the brokerage has a buy rating on Mahindra & Mahindra on the back of its decent earnings growth outlook and attractive valuations.
It's been a long time since electric vehicles had anywhere near the market share of the internal combustion engine. Today, it's still not even close. In 2017, electrics made up 1% of worldwide auto sales. But governments have always had an outsized influence on the auto industry, possibly even more so than car companies. So get ready for a lot more electric vehicles. Since electric vehicles create about a third as much carbon as those running on gas, some countries like Norway, France, and the UK have already enacted deadlines to convert all new car sales to EVs. But China is making the biggest push, in part to tackle the air pollution choking its cities.
China is the biggest market for electric vehicles, and there are two programs in place. One is subsidies for consumers, which make them quite a bit more affordable. And there's also a system in place in China where automakers are required to make electric vehicles. They either have to make them or they can buy credits from companies that do.
Electric vehicles have come a long way. The Tesla Model 3 can travel as much as 310 miles on a full charge, which is only slightly less than the range of a traditional sedan.
A few years ago, buying an EV meant buying an electric car, and now there's ones you can buy it that are at a comparable cost to a mid-range vehicle.
EVs could be cheaper than internal combustion cars by 2025 thanks to falling battery prices. There are hurdles, like charging time. It takes 30 minutes just to recharge the Tesla so it can drive another 170 miles. Still, many are forging ahead. Volkswagen says it will spend $81 billion to develop electric versions of all of its models by 2030. And next year, Volvo will begin phasing out models that use only gas.
So most of the car companies that exist have already unveiled plans to make electric cars, at least all the biggest ones. They recognize the market shifting in this direction and they don't want to be left behind.
China bought 68% more cars in 2017 than the US did. Thanks to its size and growing wealth, if China can succeed in designing and manufacturing great electric vehicles, it could become the Detroit of the 21st century.
Well, several stories like that one on the website BloombergQuint.com. As of now, if you look up the website BloombergQuint.com, you'll find a couple of stories. Here are just some of them. India's fast-moving consumer goods sector grew at the fastest pace in 5 quarters, helped by a rise in consumption, improving rural demand and low inflation, according to Nielsen India. All the details of that report on the website. In the banking space, IDBI Bank, which is under the RBI's prompt corrective action and which reported its 8th quarterly loss yesterday, has seen its capital levels fall below the regulatory requirement. Its capital adequacy ratio, which is supposed to be at a 9%, has now fallen to 6.2%. And common equity, which is supposed to stand at 5.5%, now stands at 3.9%. That's all you need to know going into trade today. Up next is Indian Open, so do stay tuned. This is Bloomberg Quint.